Vibhav Kapoor, Group Chief Investment Officer with ILNFS joins us live. Vibhav, good morning. Thank you for joining us. Vibhav, how would you characterize the market environment? Do you think the best part of the summer rally is actually now behind us?
Most of this rally has been built on hope, and the sentiment is extremely positive at this point of time. A lot of FII houses have upgraded India. There's a lot of hope that the government will come out with some serious action on the reform side. So all this is building up this rally, whereas on the actual fundamental side, on the economy side, things are still not looking too good. We've had a weak monsoon so far. Forecasts are not all that good going forward. The economy is slowing down. Corporate results are likely to be pretty lackluster later this month and next month. So you have a situation where there is a lot of hope, but that hope needs to get translated into action for the market to be able to move up further.
Vibhav, a whole host of cues lined up, both on the domestic as well as global parameter. You've got the ECB as well as the Fed meet. There are increased talks about further stimulus from both the European region as well as the US equities. There's also the RBI policy, monsoon, and within days from now we would be staring at earnings as well. Which, according to you, assumes the most importance when it comes to Indian equities that could help us snap out of the range that the markets have been stuck in the near term?
I think the monsoon is a very, very important factor. It is every year, but more so this year because the economy is already in a difficult situation, and therefore if you have a bad monsoon, that can really set back the economy by, for the next 6 to 8 months. But we won't get to know that for maybe another 10 days or 15 days. So that is going to be a very, very important factor. Corporate results are largely built in, but I think they are going to be a little bit under expectations. They are going to be pretty lackluster. We expect negative growth of about 4 to 5% in YOY profits. So that could put a dampener once the results actually start coming in, because right now, as I said, a lot of the market rally is built on hopes. So when you actually see the results coming or when they are out, that could put a dampener. So to have a positive breakout, you will need good monsoon news. You would need the corporate results not to be so bad, and definitely some policy action would help.
If we don't get any strong signals from center, if the monsoon picture in next 10 or 15 days fails to improve, do you think we could go back to that whole of 4,800, 4,900 from where we came from?
Quite possible. I don't know to what extent we can go down, but I would think that if these negative factors developed over the next 10-15 days, the market could be in this range of 5,000, 5,400, and maybe even go down to 4,800, 4,900, depending on how bad the cues are.
Because increasingly we've seen that while the frontline counters have been pretty lackluster, the trading activity has been concentrated in the mid caps. Do you think this is a trend which is going to continue at least for the next few days?
Well, yeah, till the corporate results start coming out, I think this trend can be there. We must remember that a lot of the smaller stocks, mid-cap companies, etc., had been really hammered out of shape. And, they had come down by as much as 60, 70, 80% of the last 1 year. So we are seeing a little bit of a trading bounce back because of the improved sentiment in the market. So when you have, sentiment improving as it has in the past few weeks, it's natural for stocks which have been really beaten out of shape to, rally 10%, 15%, 20%, and then the fundamentals will come back into play.
Vibhav, are you of the view that the good part of the rally, what we saw in the month of June, was a function of global risk-on rally? And once globally risk-on trade reverses, Indian markets will also reverse?
I think that's part of the reason, not the entire reason. Partly, yes, it is a risk-on rally, particularly after the European summit. But I think part of it is to do with the domestic factors, because the way the political situation has evolved, and the way, the government has been making some noises has raised hopes amongst investors that finally the policy paralysis is going to get over and you're going to see some strong policy action. So I think it's a combination of both.
When you say markets are now reasonably optimistic that news flow from Delhi will improve, what exactly could be a game-changing news? FDI in retail, something in infra, something in power, or something on roads?
All these things, if we talk of something like power or roads, it's not something, you're not going to see any big announcement coming there. These are more of execution issues, so they will take their time if at all they happen. But something like, FDI in retail definitely could help sentiment further. Maybe insurance, pension bills being finally passed could help sentiment further. But again, having said all that, a lot of these are again just sentiment boosters, and their positive impact really comes into the economy over a very long period of time. What I would really like to see is strong action on the fiscal deficit reduction side, because that's what's otherwise going to cause problems to the economy going forward. If the fiscal deficit is not reduced, then you're going to find inflation not coming down. RBI will find it difficult to cut rates, and you would always have the risk of rating agencies downgrading India subsequently. So I think the real game changer is action for the government, which the government takes on reducing the fiscal deficit, and very obviously the big one there is increase in diesel LPG prices and deregulation of the oil sector. That, in my view, would be a real game changer.
But within days from now, we would be staring at earnings as well. What is the expectation from the IT big boys, the likes of Infosys, TCS, HCL Technologies? Because the way the stock prices have been behaving in the last few trades is not giving you a very comforting signal.
Absolutely, I think you're right. And this is in spite of the fact that the rupee has depreciated 9% or 9.5% during the quarter, which is normally a very good augury for the IT companies. So I think while the rupee profits will look better on a year-on-year basis, you'll get reasonable growth because of the rupee depreciation, but the dollar denominated profits are not going to be all that good. And I think the outlook and the tone of the IT companies is going to be pretty subdued and weak going forward, because I think there is still a lot of pressure on their business side in terms of pricing pressure, in terms of slow growth in IT spends. So the outlook doesn't look all that good, and I think that's the reason why IT stocks have not been performing well in spite of the rupee depreciation. So I really don't see too much upside for these stocks going forward.
So Vibhav, at the current juncture, what are your old-fashioned investment ideas? Buy stocks for long haul?
It's always good to buy stocks for the long haul, and but in such an uncertain environment, economic environment as we are in today, I would still say stick to large caps if you really want to buy. Don't venture into mid caps also. They are looking, although they've done well in the last few weeks, but we know these mid cap rallies can come to an abrupt halt at the first instance or the first sign of a change in trend. So for a long-term investor who's not worried too much about short-term issues and can take some pain in the short term, it's, I think, still wise to stick with the big guns.
And which are the big boys you like?
We like some of the banking sector companies, but again I'm talking of the medium to long term and not of the immediate or not of the next few months. So things like State Bank, ICICI Bank, some of the other private sector banks could do well over the next say 18 to 24 months. Maybe some of the capital goods, large companies, although again some of them have run up a fair bit, so valuations are again not all that cheap. So I would say be careful, buy only at declines, don't run after stocks, and don't buy them at any price.
Are you concerned about what we've seen from the auto basket in terms of the monthly sales data? And do you think this is now the beginning of a downturn of an otherwise, extremely robust sector?
Yeah, there is some concern developing there, and I think part of that has to do with the fact that the rural economy is beginning to show weakening signs. The rural economy has been so strong in the past so many years, and even after the general slowdown, that was the area which was keeping the economy still relatively okay. If the monsoons are bad, then I think you have further concern there, because the rural economy will slow down further, spending power is going to come down, and that's definitely going to hit the auto companies.
Vibhav, if I divide the market into two large crude categories, one you've got the investment side and second you've got the consumption side. Now it's too early to buy investment-oriented stocks, and I guess consumer names are looking too expensive. So what should investors buy?
Yeah, that's really an issue. But if you are betting that the economy is going to improve, let's say even over the next 12 months, then I think it's better to buy the investment side right now, because as you rightly said, the consumer side is very, very expensive. There is a danger of a slowdown in the rural economy. So you might not get too much of performance from the consumption stocks. On the other hand, the investment stocks have been beaten down. There has been a lot of negative sentiment there. If you get some signs from the government that some policy action is going to be taken, let's say to improve the power situation or the coal situation or some more activity in the infrastructure side, I think these stocks will outperform going forward. So I would put my bet more on the investment side of the story at this juncture rather than the consumption side.
Vibhav, final question. If someone walks up to you after this interview and his question is that, look, I'm ready to digest a 15% volatility, a 10% downside, but I have a 3-year time frame. Give me some investment ideas which could be 2x or 3x in the next 3 to 5 years. How would you address this query?
Well, I don't want to put any names really, but as I said, I would say, stick to the large caps, stick to the big boys, and maybe put 20 or 25% into financials, another 40% into investment story, and maybe 10 to 15% into consumption story.
You've told me what you like in financials, so I know the 20% you like, but what about the 40%? Which are the investment names you like?
Well, as I said, I think one should stick to the big companies. So things like, Larsen & Toubro, for example, obviously is a big candidate there. Maybe some other companies which are reasonable in size but have been beaten down, like Crompton Greaves, for a 2-3 year time frame, could also be looked at. Voltas would be another one. So what I'm saying is stick to bigger companies, stick to good managements, and if you're looking really at a 3 year time frame, that's the only thing to do.